Hello, everyone. Welcome to Lecture 6 on Double Insurance and Reinsurance of the Insurance Law Lecture Series. Double insurance exists where the same person is insured by several insurers separately in respect to the same subject and interest. The following are the requisites. The same person is insured. There are two or more insurers that insure the same person separately. The insurance is over the same subject. The same interest is involved and the same peril is insured against. Thus, there is no double insurance if the owner and the lessee of the same house insure the house with two insurers. Likewise, there is no double insurance if the mortgager and the mortgagee separately insure the mortgage property, since two separate interests are insured by different persons. There can be double insurance in life insurance, but there can never be overinsurance. The implication of the rules on double insurance under the Insurance Code is that double insurance is not prohibited. The validity of a clause in a fire insurance policy, to the effect that the procurement of additional insurance without the consent of the insurer renders ipso facto the policy void, is well settled. There is overinsurance if the insured takes out an insurance over the property insured in an amount which is in excess of the value of his insurable interest. Overinsurance may exist even if there is only one insurer and one policy. For example, if Mr. A owns a house valued at 500,000 pesos, there is overinsurance if he insures it with ABA Corporation for 700,000 pesos. Overinsurance may also exist if there is double insurance. For example, Mr. X owns a house valued at 400,000 pesos and he insures it with ABC Insurance Corporation against fire for 300,000 pesos and XYZ Insurance Corporation against fire for 300,000 pesos. There can be underinsurance even if there is double insurance. For example, Mr. X owns a house valued at 400,000 pesos and he insures it with ABC Insurance Corporation against fire for 100,000 pesos and XYZ Insurance Corporation against fire for 100,000 pesos. There is double insurance, but there is no overinsurance. Here are the rules where the insured in a policy other than life is overinsured by double insurance. The insured, unless the policy otherwise provides, may claim payment from the insurers in such order as he may select up to the amount for which the insurers are severally liable under their respective contracts. Where the policy under which the insured claims is a valued policy, any sum received by him under any other policy shall be deducted from the value of the policy without regard to the actual value of the subject matter insured. Where the policy under which the insured claims is an unvalued policy, any sum received by him under any policy shall be deducted against the full insurable value for any sum received by him under any policy. Where the insured receives any sum in excess of the valuation in the case of valued policies, or of the insurable value in the case of unvalued policies, he must hold such sum in trust for the insurers, according to their right of contribution among themselves. Each insurer is bound as between himself and the other insurers to contribute ratably to the loss in proportion to the amount for which he is liable under his contract. A contract of reinsurance is one by which an insurer procures a third person to insure him against loss or liability by reason of such original insurance. Reinsurance is presumed to be a contract of indemnity against liability, and not merely against damage. The peril insured against is the risk that the insurer will suffer a loss when it will be required to pay the original insured. Reinsurance should be distinguished from double insurance, which involves the same insured and the same risk and subject matter. It should be distinguished from the coinsurance clause, under which the risk of loss of a percentage in the value of the insured property is assumed by the insured himself. The original insured has no interest in a contract of reinsurance. However, if the reinsurance policy contains a stipulation per uteri in favor of the original insured may be allowed to directly sue the reinsurer. Since the reinsurer is not a party to the original insurance contract, the reinsurer cannot intervene as a matter of right in an action filed by the original insured against the insurer. So here's the summary of the distinctions of double insurance and reinsurance. In double insurance, the insurer remains in such capacity only, while in reinsurance, the insurer becomes an insured or the reinsured. In double insurance, there is only one insured, while in reinsurance, there are two separate insured. In double insurance, the subject matter is the property insured, while in reinsurance, the subject matter is the liability of the insured. In double insurance, the same interest is insured, while in reinsurance, it involves separate interest. In double insurance, same peril is insured against in separate policies, while in reinsurance, different perils are insured against in separate policies. So that's it for today's lecture. Thank you so much for listening.